So in this video I'm going to be talking about something we call liquidity. So you might have heard about the term liquidity, or maybe you might not have heard about it, but don't worry, I'm going to explain everything in this video in a very simplified manner that will be easy to understand. So what is liquidity? Liquidity is simply where the market orders are resting, places where people have put stop losses and pending orders. So wherever the money is in the market on the charts, that's where liquidity is. So there are three types: highs and lows, equal highs and equal lows, and trend line liquidity. So when it comes to highs and lows liquidity, wherever there's a high and a low on the chart, that's where people have put stop losses, and that's where pending orders are also resting. So the market will tend to grab the liquidity before it continues in whatever direction it's dominantly moving. So same applies with equal highs and equal lows. When you look at the charts where you see equal highs and equal lows, just know that liquidity is resting there and people have put stop losses there as well as pending orders in anticipation of breakouts and things like that. And then finally, trend line liquidity. So along a trend line, as the market touches the trend line, people enter into the markets and they put stop losses to protect their orders. So that's where the liquidity lies. So here you see a demonstration of what it looks like. I'll give you a chart example, but I wanted to show you a simplified way so that you can easily picture it. So as the market is moving up at every high and every low, you'll notice that people put either pending orders there or stop losses to protect their orders or to trigger trades into the market. So here is what it looks like. So you notice that as the market was moving up, obviously people were either putting buy stops or they were putting stop losses respectively, whether at the high or a low. And then here we have something that looks like a range. So above you notice that there are equal highs, and below you notice that there are equal lows. So people have put stop losses there, and as well as pending orders. So that's where the liquidity is, and the market will target that before it can continue in whatever direction it wants to go. So here is what it looks like. So this was a gold chart some time back, and above there as well as below there was liquidity. Some people, especially the uninformed people, retail traders mostly, they like to put stop losses there without looking at the bigger picture. So it's important to identify the liquidity, then you wait for it to be grabbed and then put your orders there. So here's what trend line liquidity looks like. So you notice that as the market is going down, obviously people will be putting stop losses there in order to protect their orders. So here's an example, and in this example you will notice that price took out the liquidity. It faked out as though it was going down, but before it continued, it went up. It was a fake out and then it continued. That's what we call a liquidity grab. So it's important to spot the liquidity and then you enter after the liquidity has been grabbed. So here is just the opposite of what I was saying. This is an uptrend. So as the market is moving up, people will be putting stop losses, and in due time the trend line will be taken out. You'll find that sometimes when you put an order along a trend line, it doesn't get triggered, or even if it gets triggered, you find that it takes you out before it can continue going in the intended direction. So this is what happens. The market will seek to sweep liquidity before it can continue. So the importance of knowing trend line and these other types of liquidities is that you want to avoid being the liquidity, because if you're the liquidity, the market will take you out before it can continue, and no one wants to be taken out. Despite avoiding losses not being something realistic, you still want to avoid being taken out because we all want to succeed. So it's better to spot the liquidity and then enter after the liquidity has been grabbed, whether equal highs, whether highs and lows, or trend line liquidity. So until next time, I'm going to explain more concepts in future videos.